Hello, welcome everybody. Give everybody a second to come online before we get started. Hello and welcome to GLADA's Industry Member Spotlight. Thank you for joining us today. GLADA prides itself on providing a foundation for professional development, welcoming the exchange of information amongst its members for the purpose of business growth and integrity. This webcast series is designed to do just that. I'm Tracy with Optimized Marketing, and I am proud to sponsor this series and support GLADA and its mission to promote business between its members. I think it's a great platform to do that. Optimize is a full-service marketing firm serving business owners around the globe. We help clients gain clarity on what their business needs to grow, and then we build and execute custom marketing plans to help them accomplish their goals. And with that, I'll get started by introducing Shannon Hope. Shannon is a third-generation aviation broker and founder of Kassel Aviation Insurance. He served as an aviation broker for over 2 decades to clients throughout the United States and abroad. As an instrument-related private pilot, he has the understanding and experience to negotiate on behalf of clients, not just as an aviation insurance broker, but also as a pilot as well. He's been published in nationally recognized aviation magazines and is an active member in numerous aviation associations like GLADA. Shannon is a graduate of James Madison University's College of Business with a BBA degree in management and has a commitment to continual education improvement, studying and passing several charter, property, and casualty underwriter exams, that's CPCU exams, with the goal of achieving the CPCU designation, which is the equivalent of a doctorate in the insurance industry. He was recently awarded the prestigious CAIP, which is the Certified Aviation Insurance Professional designation by the Aviation Insurance Association. Congratulations, that's a mouthful and a lot of work. When he's not in the office, he enjoys spending time with his wife and 2 sons, traveling, cooking, golf, snowboarding, belting out karaoke, and CrossFit. So I'm hopeful for those that stay on till the end, he will serenade us with his favorite karaoke tune.
It's going to be fantastic. Stay tuned. Yeah, thank you for the introduction, Tracy.
Thank you for joining us today. With that, I will turn the floor over to you.
Yeah, so the point of the webcast is to help educate people within the aircraft sales arena about insurance. Where we see a lot of problems is when insurance is a last-minute consideration, and that's oftentimes with first aircraft owners, first-time buyers that haven't been through the process, aren't accustomed to the nuances of aviation insurance. So we worked on very tight timeframes before. We've been given a business day to secure an insurance placement on a corporate jet, and while it's certainly possible to do so, you're really compressing the time frame that it normally takes to shop the insurance market. Once we gather all the information that we need, we go out to key underwriters at each aviation insurance company, negotiate the coverage rates, terms, and that process normally takes about 5 business days. So when you compress it into such a short time frame, you're really limiting the options. That's not to say that you're not going to get a good policy that's properly crafted, but logistically, there's just no way to wrangle in all the aviation underwriters, negotiate the terms. So that's one thing to keep in mind. And there's really 2 divisions within the insurance industry when it comes to aircraft. You've got piston aircraft and turbine aircraft. We specialize in corporate and commercial aviation. We don't really do piston airplanes. But from the brokers that I've talked to that handle piston aircraft as their specialty, the entire insurance market can literally be shopped in a matter of hours. The aviation insurance companies have set up online automated underwriting systems where you literally just go into a platform, type in information, and it spits out a quote. There's nobody to talk to. There's no negotiating. It either fits in the underwriting box of the underwriting company's platform or it doesn't. So last minute deals on piston aircraft, if you have the information that you need, again, not a problem, can normally shop in a number of hours. But on the turbine aircraft side, like I was previously mentioning, normally takes about 5 business days, and that's done the old school way, where you have an underwriter that you're dealing with. They'll offer a quote, and you manipulate the wording to broaden coverage for the customer, go back and forth with negotiations on pricing and structure and things of that nature. So it can take some time.
If I could just real quick, it may be the old school way, but it sure sounds a whole lot more personalized, right? I mean, that whole, you don't get to talk to anybody, just plug it all in, maybe quick, but how does that work as far as personalized service?
Well, I think it's just a factor of the sheer quantity of piston aircraft. If you look at the U.S. aircraft population, so to speak, predominantly piston airplanes. And the premium levels are so low on those piston aircraft. I think if you've got, an older Cessna 150 with a low limit of liability, you might be paying, $1,000 a year or somewhere in that nature. So it's really cost inefficient for the insurance companies to dedicate staff to that. So the only way that it really works is to go, the online model like Progressive and Geico have done in the home and auto sector, and just automate everything. When you're dealing with turbine aircraft, you've got much higher values, much higher limits of liability, variances in pilots, operational area, use of the aircraft. So when you get into that world, it requires a more personal touch just because of all the nuances and dynamics at play.
Sure, very good. Thank you. Tell us more about that.
So in terms of insurance being a hurdle, if you've got a turbine aircraft that's flown by a well-qualified professional 2-pilot crew under the age of 65, all the doors are going to be open in terms of the insurance companies. All of the insurance companies like late model turbine aircraft that are flown by well-qualified 2-pilot professional crews. Where you can get into some issues with age is some insurance companies, especially on a single pilot basis, if you've got a CJ3 or a Phenom 300 or any of the aircraft that are certified by the FAA to be flown single pilot, some insurance companies have a cutoff at 65. So any pilot over that age is a declination. But there's a lot of insurance companies out there that can still do it. It just kind of depends on the data metrics for the pilot at hand. If we're talking about a CJ3 and he's got a lot of time in the CE 525 type flown CJs, he's got 1,000 hours flying a CJ3 and is maintaining relatively good currency at over 100 hours a year. Over the age of 65 really isn't a problem. If it's a transition where, they're coming out of a piston aircraft into the turbine world and that pilot doesn't really have any turbine experience, that can be, a more complex issue to solve.
Sure.
So on the age, again, 65 is when some underwriters start to get a little nervous, but then again, we've got a PC-12, for example, that's flown by an owner pilot that's in his 80s. Usually, if there's a will, there's always a way in insurance. It's just a matter of cost, deductibles on the whole coverage, which is the physical damage for the aircraft, and the limits of liability. And obviously, you're going to be paying a premium. But again, if there's a will, there's normally a way. On single pilot aircraft, predominantly the cap for single pilot operations is at $5 million on the insured value of the aircraft and $25 million on the limit of liability. You can certainly go above and beyond that. It just creates a little bit more back-end complexity, something that the end policyholder wouldn't really be privy to. But when you go over $5 million on the hull value, the the insured value and you go over 25 million on the limited liability, no one insurance company wants the catastrophic loss potential of 30 million or more. So in that case, you have to craft what's called a quota share placement, where you have two insurance companies that bind together to write the policy. The lead insurance company is the one that's going to be doing the underwriting, is going to be on their policy form. They'll handle all the claims, and the following insurance company simply backs them up. They split the cost of the insurance, or the premium, half and half, let's say, but you could have four insurance companies that get involved at different percentages, as long as it equates to 100. So in the event of a loss, each participating insurance company chips in their share. That's not a problem. It just kind of complicates the process a little bit, takes a little bit longer time to get it done. And then we have the issue of training for the aircraft. So I've had this happen a couple times. Had a client that was operating a Phenom 300, was getting close to signing a purchase order on a Praetor 600, and the deal fell apart because training availability was a year out. They couldn't get into the simulator to get the type rating for the aircraft and complete the initial training for a year. So they had to walk away from the deal.
Wow.
There are some, exceptions to the rule where, it might not be a year out, but I had a client that was buying a Phenom 300 and he couldn't get into the simulator for 6 months. So we crafted out a way for him to attend in-aircraft initial training and then go to the recurrent when his initial would have been done. So 6 months after he got the initial in-aircraft training, he went to the recurrent, and then from there it was fine. But those are the things that can kind of throw some wrinkles in the process. Another thing with training is in-aircraft training. The old underwriting adage is you cannot crash and kill people in a simulator. So that is why the insurance industry heavily favors simulator training. Now, obviously, there's some exceptions to the rule, like the example I just gave, where training just wasn't available for 6 months and he had to do the in-aircraft and then the recurrent in the simulator. But if you've got a pilot that is, insistent on, I don't want to go to the simulator, all I want to do is in-aircraft training, it's possible, but you're going to really limit the number of markets that are available. Case in point, about 10 years ago, I had a client that was doing in-aircraft recurrent in a West Wind 2. There were 3 pilots that were going through recurrent training. At the end of the day, the last pilot got in the left seat with the designated pilot examiner. And on takeoff, the examiner completely chopped the power to the right engine of the aircraft, a V1 cut, at a very low altitude. And unfortunately, the pilot did not have the reaction speed to counter the thrust that was being applied solely on the left engine, causing it to roll, and it went in and killed everybody. The insurance company that was on that policy at the time got out lucky. They paid about $12 million to settle the lawsuits from the heirs of the family of the deceased pilots. But that is what insurance companies fear, is just that thing. So that's why there's such a heavy emphasis on training in the simulator.
That's such a tragic story.
Yeah.
And I guess we'll never understand why the pilot really chose to do that, right?
Yeah, that's one thing if you're up at altitude and you have a large margin to recover, but doing a V1 cut on takeoff is there's no margin for error. If you do not get on it quickly and in the right manner, things are going to end very badly, and unfortunately they did. It's sad.
That is sad. So how much time should people allot for maybe more complex deals and structuring a deal so that it doesn't delay closing?
Yeah, so that's a good question. It really just depends on the situation. I had a client that bought some A320 Airbus aircraft, stripped them into a 78-seat executive configuration to run sports teams. That took a long time to put together because we had to engage Lloyd's of London. We had some insurance companies here in the United States that got on the policy from a risk perspective, but we had to backfill that quota share placement that we were talking about earlier with Lloyd's. So it gets very complicated. So, that's an outlier. If you've got risk management in a company that decrees, hey, we've got to carry 300 million on all aircraft, and the flight department's buying a PC-12 and plans to operate a single pilot. Again, the normal limit of liability is 25 million on a single pilot perspective. So when you go that big above the normal threshold, it's just going to take some time. But on easy kind of, hey, it's a new turbine aircraft with 2 pilots that are already well qualified at 5 days. Really, the best thing that you can do is to be proactive, manage expectations. I think it's a good idea to maybe have a checklist with the aircraft buyer on, hey, have you secured financing? Have you engaged an aviation attorney for structuring it, for tax incentives, things of that nature? Have you contacted insurance? Just have a little checklist to go by to make sure that the deal goes smoothly and you manage expectations with the end buyer of the aircraft.
Do the lenders require insurance? Are there additional requirements if a lender's involved?
Yeah, so oddly enough, there's no compulsory law in the United States that forces anybody to carry aircraft insurance. So there's certain people out there that just choose to self-insure. Typically, if you have a bank loan, you're going to have insurance, and the lender will set up the minimum limit of liability that they require and the whole coverage. They're obviously going to need to be added as a loss payee on the policy. So in the event of a claim, the check goes to the policyholder and the bank. Also, a lot of airport authorities and FBOs require you to carry insurance. Typically, if you don't have insurance and something happens, people tend to forget that they chose to self-insure and look for other parties for the damages. So that's pretty typical if you're going to have a hangar lease with an FBO or an airport authority. Predominantly, there's going to be an insurance clause within that contract that compels you and forces you to carry insurance.
So I'm interested on the concept of the sports teams, and you and I offline kind of discussed the high net worth individuals or the famous people needing more insurance. And I still am a little confused on if a famous person is involved, what is the payout there? What are they insuring? I mean, this is a hard question. Is the value of that life more than the value of a non-famous person's life, right? Why does it cost more to insure when big name people are involved?
Great question. And that's become a problem within the aviation insurance industry. Years ago, there used to be a mathematical equation that was applied. Hey, John was a cardiologist. He died on board the aircraft at the age of 40. He was making X amount of money a year. He had the potential to create X amount of wealth through his cardiology practice until retirement age of X. Loss of consortium, things of that nature would be added in, and there'd be a mathematical equation. What we've gotten into now in the industry is social inflation, where there are nuclear verdicts. There's been several instances. For instance, there was an AirMed helicopter that went down in Colorado where one of the flight surgeons received burns to 80% of his body, horrible shape. He was awarded $125 million. There was a ballet dancer that was injured at the Chicago O'Hare Airport in one of the bus trams where they have that kind of accordion piece that connects the buses together. Somehow that material eroded and she fell through it. She was awarded over $100 million. There was a line worker in Texas that got hit by a fuel truck, over $100 million. So in the past, again, there would be a mathematical equation that's applied, but typically these days, juries are striking back at, big corporate America, and they just see it as, hey, well, that's what the insurance is for, and they've got a limit of 200 million, so we're going to give it to them as much as we can. And that's really sent shockwaves through the insurance industry, and it's become a big problem. And part of the reason that insurance premiums, now that they've leveled off now, but for the past 6 years or so, there's been a steady increase in insurance rates due to a multitude of factors. But these runaway juries and these nuclear judgments and the social inflation is having a big impact on the industry.
So I want to go back to, you talked about injuries and inability to produce the income that they might otherwise have normally been able to. But in the instance of death, does not a life insurance policy step in and help cover?
It would, but anytime that there's, grave injury or death involved, people sue. That's what we do in the United States.
Right.
Whether it's a car accident or an aviation accident or anything of that nature, especially if there's, negligence involved. That's the society that we live in.
Yeah. All right. Well, that's great. I kind of asked a bunch of questions. I hope I didn't derail you.
No, thank you. No, I've enjoyed the questions. Good questions.
Good.
So yeah, that's really it in a nutshell. Again, just be proactive. Aviation insurance is a very unique product line. Your auto, your home insurance, those are done on standardized ISO forms where the building blocks of every policy are identical. And insurance companies can, give bells and whistles by offering endorsements, but the policy language is identical from one carrier to the next. Aviation is very unique. Every aviation insurance policy has their own unique policy language, their own endorsements. So having a understanding of each insurance company's policy, the endorsements that are available, and how to manipulate wording is critical. Our job as insurance brokers, although we work with the insurance companies on your behalf, is to stack the deck in your favor. We're trying to protect our clients and our assets and their brand to the fullest extent possible. So our job is to manipulate wording to broaden out coverage. So in the event that anything happens, coverage as broad as it can possibly be. And while obviously cost is a factor, I would encourage, the aircraft brokers to use an aviation insurance broker they trust to guide their clients through the process if it comes up. Oftentimes it doesn't. They've already got an insurance broker in place and they're upgrading an aircraft. But coverage can vary greatly between one insurance company to the next. So it's important to use an aviation specialist that's trusted.
Sure. The nuances in this industry are so just that, nuanced. It's just important to have somebody who knows aviation, because if you don't know what you're going to get, because it's not standardized. So this was really fantastic. Thank you, guys. Thank you all for joining us.
Thank you for hosting me.
Yeah, and if you would like more information, feel free to visit Shannon at his website, kasselaviation.com. And if you would like more information about us and the services we offer, it's www.optimize.marketing, not .com, just .marketing. So thank you again. It was great to have you today. You sure? Last chance to sing some karaoke for us?
I'll spare you. My voice is a little.
Oh, scratchy. Yeah. Okay. Well, thank you all, and thank you for joining us. And it was great to chat with you today. Thank you, Shannon.
Thank you, and thanks for everyone.
Okay, I think we're good. think that's awesome. Did we end it?
Well, thanks.